Coinbase has dragged the United States financial markets regulator, the Securities and Exchange Commission, to court. The duo will meet in court this Thursday for the first time in the federal regulator's lawsuit against the crypto exchange. This should help clear the doubt with regards how the judge is looking at the case in its earliest stages. The case just began and is likely to drag on for years if the parties don't settle. Still, in the interest of reading tea leaves, the questioned judge Catherine Polk Faila asks and how attorneys for the SEC and Coinbase respond will indicate what issues may take prominence during the start of this legal battle. It may be recalled that the SEC sued Coinbase in early June, alleging that the cryptocurrency trading platform was simultaneously operating as a broker, an exchange, and a clearinghouse for unregistered securities, namely 13 different cryptocurrencies the SEC alleged met the requirements of the Howey test, the 1940s precedent laid down by the US Supreme Court. Coinbase has telegraphed the SEC lawsuit for months, publishing a blog post when it first received a Wells notice from the regulator and maintaining a legal effort to convince a court that there is not enough regulatory clarity right now for crypto industry participants to know whether or not they are running afoul of federal securities laws. The exchange continued that effort in its first formal response to the SEC last month, when Coinbase argued that the SEC was violating its due process rights and simultaneously trying to preempt Congress by bringing a lawsuit. Coinbase also argued that the allegation should not have even applied to its operations. The SEC was not swayed by this argument. In its response to the answer, the SEC said, Coinbase attempts to construct its own test for what constitutes an investment contract. In the regulator's view, the lawsuit is proper, and moreover, it pointed to Coinbase's public disclosures that it might get sued as evidence that the exchange has already acknowledged the possibility.
Recent rally in treasury yields is fueling optimism among currency traders, especially virtual digital currencies investors. As per recent data compiled by RWA.xyz, the market value of blockchain-based investment product that wraps US treasury bills, bonds and money market funds into a form of a token totals $614 million. Demand for tokenized treasury among digital asset investors has been steadily growing as the yield on US government bonds, widely considered as a risk-free interest rate, surpassed yields in decentralized finance. DeFi yields plummeted as demand for borrowing and leverage collapsed during the crypto market downturn. Meanwhile, bond yields in traditional finance rose significantly as the Federal Reserve Bank jacked up interest rates to the highest level since 2007 to combat rampant inflation. This year, a slew of new entrants such as OpenEden, Ondo Finance and Maple Finance released blockchain-based treasury products targeting sophisticated investors, digital asset firms and decentralized autonomous organizations. The entire macroeconomic backdrop has shifted. Jack Chong, guest researchers at RWA.xyz, noted in a report. This naturally attracts investors to shift their exposure from crypto assets into US treasuries. Tokenization of real-world asset has become one of the crypto's hottest trend and could reach $5 trillion market value over the next 5 years, wealth management firm Bernstein said in a research last month.
Coinbase shares worth $12 million have been sold by Cathie Wood's ARK Invest as the stock surges to a level not seen in over a year after the exchange disclosed a surveillance sharing arrangement with 5 applicants for spot Bitcoin exchange-traded funds. Following the news on Thursday, the price of Coinbase increased 16%. The Securities and Exchange Commission has previously implied that thorough surveillance sharing arrangements were essential for the approval of spot Bitcoin ETFs. One of the biggest owners of Coinbase, the tech-focused investment firm ARK, controls about 11 million shares of the company across of its all fund. In all, the Coinbase stake accounts for 6.2% of ARK's fund weighing. Market data indicates that the ARK FinTech Innovation ETF, the ARK Innovation ETF, and the ARK Next Generation Internet ETF have an expected cost average of $239 to $254 and $242 respectively for coin. Coinbase's price fell in early June as a result of the SEC's action against the exchange, prompting ARK to purchase shares for $21.6 million. On Tuesday, Coin increased by almost 10% to close at $89.15. Since the SEC sued the exchange on June 6th, the stock has increased by 72%. That's all in today's special segment. For more such updates, follow 3.0 TV or log on to our website at www.3versetv.io or scan the QR code to know more.